Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Long Verticals and Diagonals. And today I thought we'd talk about how a trader might find potential trade candidates for trading long vertical spreads. There are some powerful tools on the Thinkorswim platform. I want to talk about looking for bounce or breakout signals for bullish vertical spreads, maybe include a teaser for bearish. A lot to cover, but before we get to any of that, though, let me first of all say hello to everybody who's already chatting in. Hi there, Ricebird, user LKKU, and on that one goes. Scott, Kevin, Janelle, JDLMI, Robert, everybody else. Richard, hello, good to see you. But everybody else, thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording. It's a great way to watch these webcasts. But be aware that you're invited to join us in the live stream if you would like to be here. This is a Thursday webcast series, and we kick things off promptly at 11 Eastern time each Thursday. Love to have you here in the live stream audience. Now, as a treat for our live stream audience members, my very good friend Brent Moores is hanging out in the chats there. Brent's going to be keeping an eye on any questions that come in that I don't get a chance to address. Brent will help me pick up the slack there. Brent and I have now been working here together for more than 2 decades. Can't believe it, but it's true. So Brent brings a ton of experience to this discussion. Thanks for helping me out there, Brent. And Brent and I would also like to issue an invitation to everybody to follow us on social media. You can follow Brent and me on X. You can find Brent there at Brent Moores CS. You can find me on X at Cameron May CS. You can also follow me on LinkedIn. Just go to linkedin.com/in/Cameron May CS. Easy for me to say. Fortunately, that's on the archive. So if you need to slow it down and revisit that URL, you can do that. But yeah, if you reply to me on social media, I try to reply right back to you. It allows for a little bit of communication. It's not otherwise available when the camera's off. All right, but let's get right into this discussion. As we dive into this discussion of vertical spreads, of course, those strategies include risks, as just about every trading or investing strategy does. So bear this important information in mind. Options carry a high level of risk and are not suitable for all investors. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. And investing involves risks, including the risk of loss or loss of principal. All right, so let's set an agenda for today's discussion. This is an ongoing webcast series. We already have trades in place, some example trades that we've been managing and monitoring. We have 4 positions, so we're going to take a look at those, see if anything needs to be done with those. Then we're going to have a look at what's going on with the S&P 500, just see what the market backdrop is for traders right now. Then we'll move on to our discussion of vertical spread trading and how a trader might use the tools available on the Thinkorswim desktop platform to find potential trade candidates. So specifically, we're going to be looking for bullish candidates exhibiting recent bounce or breakout signals, okay? Then we're going to plan and place an example vertical spread and wrap it up with a bow. So that's going to be the plan. Let's go right to the Thinkorswim desktop platform and look at those 4 positions. We have Amazon, Johnson & Johnson, Tesla, and pardon me, United Health. So let's see what's going on with Amazon. All right. Amazon is a long call diagonal spread. We bought the 16th of January, 2026, 240 calls. Those expire in 64 days. Preference there is for the stock to go up. But at the same time, we sold the 21st of November, 2025, 260 calls. So those are expiring in about 8 days. Not about, but in 8 days. Preference there is for the stock to stay below 260. So that creates a very specific preference for our trade setup here. We'd like our stock to go up, but to stay below 260. Well, right now, it's certainly below 260. I don't know about the going up part, though. So here's what's going on with Amazon. Bought the long calls here. The stock did start going up, but oops, it's kind of reversed course. It's coming back down toward that lower strike. So the short calls are doing fine. Long calls are the ones that are kind of struggling. So our preference here would be that we're going in this direction right now. It's misdirection. We'll see if it can reverse. I don't see at least a strong technical case for taking any action right now. Maybe a trader, if they saw this break solidly below that support, if they became convinced of continued bearishness on that on the stock, maybe it's time to be out of a bullish trade like we have right now. But I'm going to let that one continue to work. No change to Amazon. Although, let me take a quick glance. You'll notice the call that we sold for $1.30. We might be able to exit and retain about $1 in realized profit on that. On that, though, I'm going to let these final 8 days, those days contain, especially if we're out of the money, some of the fastest per day potential for return. So we could potentially choose to exit right now and, assuming good liquidity, get out, but we'd be leaving about 30 cents on the table that are right now high probability outcomes. So I'm not going to change that at the moment. So I'm going to leave that one alone. Let's go to Johnson & Johnson, which is a long call diagonal spread. Bought the 190s, sold the 195s. The preference here is for the stock to be above 195 as we approach the 19th of December. Now, we're above 195 right now by, look at that, half a cent. Did you see that change? Yeah, it's doing its thing. So back here again, this is our Johnson & Johnson trade. And I saw a question come in that relates back to another webcast I had just recently. It was on Friday. We talked about trading the 3 green arrows method. And somebody said, hey, this had a recent 3 green arrows. I'm not going to show that on the chart, but that would actually be typically interpreted to be a bullish signal. Well, this is a bullish strategy. So it's really just a confirmation. It's another technical confirmation of the potential appropriateness of this strategy. I have to say potential because nothing is guaranteed here. But yep, look at this thing. Teasing right there at our upper strike. We still have some time till expiration, so that's doing okay. We'll leave that one alone. Moving on to our Tesla position. This one was at break even this morning. Something has changed on Tesla. This is another long call diagonal spread. Pardon me, vertical spread. Bought the 400s, sold the 410s. We want to be above 410. We're right in the middle of those strikes right now. So the short call's out of the money. Early assignment risk has gone down there. But the long call, still in the money, but just not behaving the way that we would like. Let's go have a look to see what's going on with our Tesla. Here we bought the 400 long calls, sold the 410 short calls. That was done right up here. And you can see initially trade was working in our favor. Then it kind of waffled around, which is okay as long as we're still above 410. But this is now starting. Could it just continue to collapse? This is one I think we're going to have to keep a close eye on. The trader may be making some potentially difficult decisions on this one. We'll see if this one can reverse course, but not terribly encouraging that it appears that we've broken right through a support level that was previously encouraging. None of this, again, is a guarantee that, ooh, this is the end of the world for Tesla, or even near-term guarantee of bearishness, but we'll see. It's getting close, though. We'll see. We'll let that one continue to work. That's a brand new development as of this morning. So now we have United Health Group. United Health, it's doing okay. Bought the 380 calls, bought the 300 calls, sold the 380. We'd like for the stock to be above 300, but to progress toward 380, staying below 380. Here's what it's actually done. No. So this trade was entered as a bullish trade on the apparent evidence of an inverted head and shoulders with an island gap reversal down here at the bottom. We broke up through what we'd call the neckline of that pattern, and we were keeping an eye on this. Last time, we had decided to consider closing this position if this neckline broke. Now, last time, we were actually right at the neckline, decided not to do anything. And for about a day afterward, this was looking like a questionable decision. However, it's reversed course. It's starting to go up again. So this is starting to behave again as we might have hoped. And you might wonder, well, Cameron, if we didn't exit when we were having our discussion last time, why did you get out the next day when it was more clear that that support apparently had broken? I don't make any changes to these portfolios when the camera's not on. So that's it. That's why there was no change made. Now, fortunately, that's worked out in our favor and we're back up above that neckline. We'll see if that can continue. But we'd really prefer for this to go up while that 380 remains out of the money. Maybe that allows for appreciation of the long call value while permitting the short call to expire worthless. We'll see. Chris says, should we roll the short strike? Let's see, Chris. Let's have a look at that short strike. So we originally sold that for 265. It's only worth 38 cents right now. Now I'm going to put only in air quotes there because that's what is that about, I don't know, 15% of the original value of the short when he sold it. So in other words, we could very likely exit and realize about 85% of the full potential of that short contract. That's one side of the argument. The other side, though, is there's a high probability if we just leave this one alone, don't tinker with it, that we're going to make an additional 15% of that, very likely, as long as the stock stays below 380. And right now it is way below 380 in percentage terms. And you might look at this chart and say, that's not really way below. Well, it's a $334 stock with a 380 strike. So it's $45 below. That's more than 10% below our short strike and only 8 days till expiration. I'm not going to roll this time. What I'll do is let this go another week with the high probability that we'll make more money over the next week. Now, if the stock rallies, we might come back here, especially if it rallies up close to 380. Could it even go through? It could. It's not likely, but it could. That could make me sing a different tune. But right now, I'm going to let that one work. So no changes to our portfolio today. But I do want to add a new position. So we're going to do that within the context of current market conditions. So let's see what's happening. The S&P is not having a great start to the trading day. Down about 1%. I think that takes us down to about 2% off recent all-time highs on the S&P. Is this the start of a brand new extended bearish move on the markets? It might be. Dragon Rider says how many days to assignment on the short that I was just discussing? 8 days. So right now it's Thursday. That one expires Friday of next week. So not a lot of time for that stock to travel about $45 to the upside just to get in the money. Even an out of the money contract could be assigned. Less likely, but it could. But when it's that far out of the money, if somebody wants to assign, what they would literally be saying is, Cameron, I'm gonna buy your $335 stock for $380. All right, twist my arm, overpay for those shares if you want to. Anyway, could leave. If that were to happen, though, that could leave the position in a short stock. It could leave the portfolio in a short stock position. But this is a covered position. We do own the long call, so we do have the right to buy shares conceptually at a lower price even than 335. Could buy at 300 because that's our long strike. In any case, is that right? Hope I'm not. Yep, that's right. Anyway, yeah, we're going to let that one work. In any case, let's look at the S&P 500 and what I kind of note on the S&P. Now, this is only one technical view. Yes, it's having a rough day, but reality is we really are just trading a little bit off of those all-time highs. And I think a case could be made that the trend has not changed yet. We've still seen, at the very least, higher lows persisting. Some traders might also note, if you go off these recent lows and carry that trend line back, there's a pretty interesting level of potential support and resistance here. So we saw price ceilings on the S&P 500 along this ascending diagonalized ramp. And if we broke up through that, that seems to be acting as a price floor ever since. and that floor appears to be intact. So that might be helpful in a trader who uses highs and lows to determine what is the current trend of an index or a stock. Well, if we break that trend line, that might be an early signal that there is something longer term bearish developing. Again, just one technical view. It's not a guarantee, but let's extend that out to the right. There we go. And that looks like that's still intact. So let's just say that our hypothetical trader here has that view of the markets. They think that this little pullback, maybe it'll terminate either almost immediately or within a few days, maybe at lows down around that trend line. That's their expectation. It's not reality at this point. So we'll see what happens, but let's just say that our trader thinks we're more likely to go up than down from here. So we're going to do another bullish vertical spread. And I already picked a stock out on which we're going to be doing our trade. I'm going to be trading AVGO today. And you might wonder, why did you choose this? Well, you might notice some similarities between what's happening on AVGO and Broadcom and the S&P 500. There's been this trend line where we're sitting right at that trend line right now. So for some traders, they might actually see that as an optimal time to enter. It's also, the stock has broken a price ceiling on this strong gap up. We had an apparent ceiling around 320. That's acted as a pretty good support. So even if we break this trend line, there's still another area of support down below that might make that trader bullish. We add all this up, and again, it doesn't deliver a guarantee, but we're going to be placing a vertical spread on this stock today. We're going to keep an eye out on this earnings announcement. So I'm going to be planning the trade to conclude before that earnings. And for those traders who just prefer not to trade over earnings, we'll set up our demonstration that way. But kind of begs the question, Cameron, how'd you come up with this stock? How did you find this stock? Well, I ran a search. So let's talk about running a scan or a search or a screen or a filter, or whatever you want to call it. On Thinkorswim, it's called a scan. And we're actually going to be, even though we're looking for an option trade, we're going to be using the Stock Hacker. All right. Now, this scan that I'm going to be putting together is going to be looking for specific behaviors on a stock chart. So that's going to include study filters, which are only available on the live platform. So this right now is the simulated or paper money platform. We're going to be switching over to the live platform to build the complete scan. So if you're trying to follow along and you can't perform the scan that I'm showing, it's probably because you're still on your paper money account. All right, so let's switch over here and move to our, look at this, it's a bit of a teaser here. You can see that I already ran the scan today. Let's reset this so you can see how we do this right from scratch. All right. So I got to set the stage conceptually for what a trader might be looking for. And there are a number of things when looking for a bullish vertical spread that the trader might emphasize. So let's kind of lay those out as we've cleaned up our scan here. Let's go back to the paper money and talk about maybe some potential priorities for a would-be long call vertical spread trader. Well, a long call vertical spread is bullish. So maybe prioritizing recent chart behavior that appears to be bullish, that might be a top of the list for priorities for our vertical spread trader here. Well, how do we define bullish on a chart? How do we search for bullish on a chart? Now, JDLMI says in the scan for stocks, you only scan for stocks, Stock Hacker, and Options Hacker. Not necessarily. The Options Hacker has conceptually a few more, well, a lot more things that we might include if we're looking for specific behaviors or specific characteristics of like a vertical spread. However, in my experience, Stock Hacker can also be perfectly serviceable. Now, Brent, you can set me straight on this. If you want to contribute to that as well or not, it's fine. But yeah, we're just going to be using the Stock Hacker today, and I think you'll see that this might tick all the boxes for what this trader is looking for as I set up the scenario here. So the first thing is we're looking for bullishness. All right. Actually, might not even be the first thing, because if we have a bullish stock that's not optionable, if we have a bullish stock that is optional but has really poorly priced options, maybe the fact that it's going up doesn't matter because the trader might not trade it anyway. So maybe an initial point of emphasis might be that a stock is optionable and that it is liquid. Let's go put in a few of those priorities on our scan. So first scan might be, illiquid stocks tend to have even less liquid options, and that can cause the spread between the bid price and the ask price to drift apart, making it more difficult to get into or out of those options efficiently, makes it harder to trade them, much less trade them profitably. So let's add that as an initial requirement. Let's look for high liquidity. Which stocks are the most liquid? Well, they're literally the biggest companies in the world tend to have the highest trading volume, and that can trickle on down to stronger trading volume for the options and assist with that pricing issue that I just discussed. So I'm going to make an initial requirement that we are looking for some big companies, market capitalization in the millions. How many millions? For today, let's set our example at 100,000 million. That sounds like a weird number. What that literally means is $100 billion as the minimum capitalization size of these companies. Now, even with Broadcom, that's not just a $100 billion company. That is a $1.6 trillion company. It can still have liquidity issues on its options. So if a $1.6 trillion company can have liquidity issues, you can imagine what 10 billion, 5 billion, hundreds of millions of dollars sorts of companies might have. Yeah, I'll try to remember to emphasize that as we go to actually place the trade. You can see even on a company like Broadcom, there can be a kind of a wide spread between the bid price and the ask price. So that's going to be an initial requirement. Our trader, let's just say that they need to see at least $100 billion in market capitalization. Another thing that could be a consideration is the market price of the stock. Lower priced stocks tend to have relatively few options to choose from when constructing a vertical spread. High priced stocks might have more options, but obviously if we start to get into really high prices, if we allow a contract to go to expiration, if it's long and it gets exercised on our behalf, or if we get assigned on a short, that can tie up a ton of money. So let's just say that our trader has a preference for maybe trading stocks between 100 shares as a minimum, and maybe 100 shares, $100 as a minimum, and $500 as a maximum. So we're looking for great big companies trading in a range somewhere between $100 and $500. Now, obviously, that's not a range that's appropriate for everyone out there, but this can be tailored. I'm just showing you how the screen or the scan works, and then each trader should feel like they can tailor this to their own preferred approach if they use this strategy at all. This is not me trying to promote a strategy. I'm just demonstrating how it might be executed if it's interesting to a trader. All right. So now we're looking for liquidity. We're looking at price. Now we're ready to go back to that chart and look at bullishness. So there are a whole bunch of different ways that we might define bullishness on a chart. But one of those ways is to look for a trend, much like we're seeing on Broadcom. And one of the tools, probably the most commonly employed tool for identifying trend, is what's known as a moving average. So I'm going to come up here to our Flask icon, and let's add two moving averages to our chart. Let's go with one that's intermediate and then one that's a little bit longer term. So let's choose simple moving average from our list of available studies and add two of those. So click Add Selected twice. And the first one, let's look at a 50 period simple moving average to represent intermediate or short-term to intermediate term trends. Let's make that one red. Oh. And then let's customize this one to be a 100 period simple moving average. I'm going to make that one green. I'm also going to make that one a little bit thicker because some people can't see the difference between red and green. So in this case, the thicker one is our longer term moving average. Okay. So I'm going to click OK and click apply. And so here's how a trader might define trend. If our shorter to intermediate term moving average is rising and is remaining above our intermediate to longer term moving average, maybe that means that prices have been strengthening over a shorter period, sufficiently enough to keep us above that longer term trend. Now, even with today's move, and I'll tell you, this is kind of throwing a little bit of a wrench into the premise of the discussion that I wanted to have today. That's okay. I think all of us, we're all adults. We can look at this and say, all right, when I was looking at this stock earlier today, where was it? Well, it was above that 50 period moving average. Coming down a bit, that even with that move today, I think a trader might make an argument that the trends still appear to be intact. We'll see. We'll see. Might be one of those trades that doesn't work out for us. It's okay. It's all for educational purposes anyway. But let's say that this is our trader's definition of an upward trend, 50 rising above the 100. All right. Now, I'm going to have to look with today's big move on the S&P 500. This will be interesting to see what we find, but I'm going to further tailor this search. So let's first of all add a requirement that a 50 period moving average is above the 100 period. And that can be accomplished using a custom filter here. So I'm not going to use this default stock filter. Let's erase that one or delete it. And instead, we're going to add a custom study filter. And this is what when I was mentioning, there's a tool that's only available on the live platform. This is it. The study filter tool functionality is only available on the live platform. Dan, you say it looks like potential bargain time for Broadcom. We'll see. That could be if price kind of strengthens in the near term. Right now might be a bargain. Obviously, we might have a different opinion if it continues to fall. What looked like a bargain can turn into overpaying pretty quickly. But in any case, let's put in a requirement here. I'm going to for our study, create a custom study. And specifically, we want the 50 to be above the 100 simple moving average, right? So let's just delete the ADX crossover. We're not going to use that. And instead, we're going to add our own condition, which is one study is going to be above another study. So our first study is going to be a simple moving average of 50 periods in length. And we want that to be greater than, the 50 is greater than the other simple moving average. Let's change that to be the 100. And then the only other requirement is that we require that to be the fact or the case today. So right now, today's bar needs to be, or in this 24-hour period, we need the 50 to be above the 100. Not as a new development, but just as a current fact, okay? So let's click Save, and let's click OK, and that takes care of that trend filter. But as we've already seen on Broadcom, it may be the case that our trend is up, but maybe price is weakening. I'm going to see if we can filter that out. All right. So let's add a second requirement, and that is that the price, even if it slipped down below the 50, if it's fallen further than that, if it's gone down below the 100, maybe that's where the trader's drawing a line in the sand where price might be leading the trend lines. So let's add a second requirement. Let's go back up here and add a filter. Go to our study. Or maybe if you want to see that visually. So our trader might be okay with the fact that we've broken through this shorter term trend line because the longer term is still up. The 50 is still above the 100. Couple of different indications that we still have bullishness. But if price were to break on down below the 100, that may be an early sign that maybe the 50 is going to follow, maybe the 100 is going to follow, maybe the bearishness has started, and our moving averages just haven't had a chance to catch up just yet. So let's make sure that our prices of anything that we find are at least still above that 100, much like Broadcom is right now. Okay, so let's go back here and let's add another study filter. But in this case, our custom filter is going to be, let's delete our ADX and add a condition. And this is that price, it's not a study, but price itself. And let's just define that as the closing price. We want the closing price to still be above, is greater than our study. And in this case, it's going to be our simple moving average of a 100 period length. There we go. And we'll just leave that as current bar needs to fit that criteria. So let's click save and click OK. So now we have two price requirements. 50 period is above the 100, and that price is above the 100 period moving average as well. It hasn't had a chance to defy both of those trend lines and pop down below. And we might be okay with that, but I want to do one more filter here. And that is, there are lots of stocks that have gone down in recent days, especially with the day's move. And for some, like Den, who's saying, ooh, it's bargain time. Yeah, for some vertical spread traders, they may actually specifically like to see that. Their preference here being that even in an upward trending stock, getting into a new bullish position at or near lows may be preferred to getting into a new bullish position at or near highs. So actually, a pullback much like this might be exactly what they would like their scan to find. So I'm going to add one more filter here. And this one, we can just use one of the default study filters. Let's go up here and add filter. I'm going to choose study. And let's say that we want to see price. In other words, we could say price performance near a low. So where it says price performance near highs or lows, let's do near a low. So we want, in this case, let's use an example. Let's say the current price is within about, let's say 2% of the 10-day low. Over the last 10 days, maybe price has been higher, maybe price has been lower. What our trader here is looking for is where price has pulled down and is trading within a percentage point or two of the lowest point that it's traded in the last 10 days. That's what this would mean. So if we add all of this up, here's the scan that we've created. Looking for great big companies priced between $100 and $500 per share that apparently have upward trends as defined by 50 rising above the 100, and price, if it has pulled back, and we've actually asked it to have pulled back here, we don't want it to have pulled back so far that it's gone down below the 50 and also below the 100. But we do prefer that it's trading within a couple of percentage points of its 10-day lows. And also, maybe I'll explain why 10 days. Well, for some traders, they note that stocks don't tend to just go straight up or straight down, but instead they'll tend to move in cycles, maybe over a period of days to weeks. And for some, they'll notice a typical, it's hard to say typical because each cycle is a sort of an event unto itself, but it's not uncommon to see these cycles to move through highs and lows over the course of a few weeks. So if it's a couple of weeks up and then a couple of weeks down, at 10 days, may be just enough to see the price pull down and still be near those lows, right? That's it. Jay Sunchi says, is this scan going to use the number of stocks the company has on the markets? I don't quite know what you mean by that. My apologies if you could rephrase. Let's see. Andrew says, Cam, from a technical perspective, is the bottom of the candle on the gap up, happened back in September, considered new support? Good question. And yes, yeah, on a nice gap up, typically the top side of the gap, or in other words, the bottom of that gap candle, is commonly seen as a potential new support. And with Broadcom, it did a pretty good job of acting as support. There was a little bit of a penetration below that, but otherwise it's been pretty good. Yeah, Andrew, if we go back and look at that chart, so the bottom of this candle is what you're talking about. And you can see there were a few days here where we got a few dollars below that. But that top side of the gap was a reasonable support. Not the perfect textbook example there, though. All right, but let's do a scan. This is going to be interesting because when I ran this earlier today, the markets were more bullish than they are at this moment. So let's see what we get. I'm going to run the scan. Looks like we still have a good number of stocks, including, hey, what do you know? There's Broadcom. So this is the scan that produced the stock that I'm going to be trading today. Now you can build this scan for yourself. I can also, let's just do this, save everybody some time, I guess. Let's come up here and share this scan. So let me just pop this in the chat. Just be advised that shared scans are not guaranteed as to timing or accuracy. But once you've created a scan like this, we can go back up here and we can save that scan query. And let's just say we're going to call this our bullish verticals bounce scan. Now I'm going to change the setup scenario here just a little bit, because the premise of this scan that we just created was to look for uptrending stocks, big stocks among the most liquid out there, uptrending, but that have recently pulled down to a potential price floor. Now, some traders actually have the opposite preference. They like to look for stocks that are breaking through a price ceiling. Now, you can see a recent example of why that might be not always productive. Nothing ever is always productive, but nothing's a strong word. I suppose if somebody has found some way to always be productive on an entry, that'd be great. Let me know what it is. Anyway, but let's say that our trader is looking for something like, hey, J&J is not near lows, but it's actually pushed up through recent highs. So it's interesting because somebody asked, hey, Cameron, that J&J position that we have right now, do we need to do anything with this? If it's showing 3 red arrow or 3 green arrows, actually that might, that's just sort of a bullish confirmation of our bullish strategy. Doesn't mean it's going to, it's guaranteed to work. But let's say our trader is looking for breakouts instead of bounces. Well, instead of being at near-term lows, they're looking at near-term highs. We need to make a couple of changes to our filter here. We're actually just going to modify the one that we have because we already saved it. That's okay. We'll save it as a new search or a new scan when we're done with it. We're not going to do anything with these first 3 criteria. We're still looking at big stocks with a specific price, still looking for an upward trend, but price itself, we're not looking for it to have recently pulled down. Matter of fact, we're going to try to sidestep that to the fullest extent possible. So instead of price being maybe below the 50, let's not allow that. Let's edit this. Let's edit this and say we want that to be greater than not just the 100, but even the 50. Okay. Let's click Save. Click OK. So now our close is greater than the 50 simple moving average. And we want a current price that's not within 2% of a low. Let's say we want it to be within 1% a high. For the last 10 days, we want it to be up there near the top. That is the modification to change this from a bounce search into a breakout search. Let's see if it did its job. Let's click Scan. Look what's right there. Right there at the top. There's Johnson & Johnson. There's AbbVie. I wonder what's going on with AbbVie. Let's go have a look. BBV. Yep. You can see that one. It is trading above its 50. The 50 is above the 100. There's a bullish trend confirmation, a bullish price confirmation, and it even looks like, I didn't look at this one earlier today, but interestingly, just pushing through an apparent resistance. There's another one here, maybe not as strong. This one had a whole bunch of touches. This one only had 1 touch. In any case, let's go back and save that as well. Save that scan query, so we don't have to go back and reconstruct these next time. Oops, I didn't want to do share. Actually, let's do share, and then we'll save it. How about that? Let's share this. Go. And again, not guaranteed as to timing or accuracy. But now let's go back and save it. This is a bullish verticals breakout scan. But now to wrap up our discussion, let's go back to Broadcom and put a bow on this by planning and placing the trade. Yep, we might have hoped for a stronger bullish candle today. So with this kind of bearish momentum, yeah, we're taking a little bit of an elevated risk probably. But maybe that adds up to another day and a half of selling and possibly bounce off these lows. Time will tell. But I'm going to go to the trade tab and keeping an eye on this earnings. Let's get into a trade that's going to be concluded before the 11th of December. So let's go to our trade tab. Looks like we have the 21st of November, 28th of November, the 5th of December is before the 11th. Now, what you'll notice here is pretty good spread between the bid price and the ask price. But for this one, I think what we'll do is just do an at the money vertical spread. Okay, stock's trading at about 335. Let's go 330 and 335. Let's change this from spread single, go to vertical, go to 330, 335, and let's click on that ask price. 255 debit for one contract. We might need to spend more than that. Let's maybe say we're willing to spend up to $3. $300 on one contract. We try to keep this under $4,000. That would allow us to get about 13 contracts. How about we do that? 13 contracts. Let's click confirm and send, buying 13 verticals. The 330, 335 call vertical. That would be, if we're able to fill at that price, $3,900 investment, leaving $2,600 for profit potential. Add in some commissions. And there's a reminder down here. Please note that you've selected a weekly option series with a non-standard expiration date. Yep, these are weekly contracts. Just a little reminder of that. And let's send that off. And we'll see if we can get that one filled. That one might be a little bit sticky. As you see, even a $1.6 trillion company can have a relatively wide bid-ask spread. And look at that. We filled at 275. That leaves 225 on each of those verticals, $225 on per contract pair, 13 contracts. So we'll see how this goes. But guys, we've covered what I wanted to talk about today. I wanted to discuss how a trader might build a bounce and a breakout scan for bullish vertical spreads. Now, what I'd like you to do is think about how might I tweak that scan and make it bearish. I think you can do that. Go to your paper money, see if you can walk through the logic of turning that bullish scan, one of the two, into a bearish scan. Is this a bull? It is a bull call strategy, a bull call spread more completely, Lola. Yeah. Okay. But time for me to let you go. We have several more webcasts coming up, but just be aware that you have other educational resources available to you. Let's make sure that you're aware of all of those resources available to you from Schwab. So number one is, if you are here for the first time, or if you haven't subscribed to our Trader Talks channel on YouTube yet, make sure you do that right now. Go down and click on the subscribe button. It only takes a second. It doesn't cost anything. But this channel is where we house our live streams. You can join our live streams right here. You can also find playlists for our webcast series. So I can click on the playlists and go down toward the bottom and find the previous webcast for this series. There it is, long verticals and diagonals. Click on view full playlist, and there they are. There's last week, the week before. So if you're trying to really strengthen your understanding of a specific strategy, that's a quick way to do it. Now, another thing that I want to make you aware of is that you should be following your favorite presenters here at Schwab on social media. You can follow Brent and me on X. You can find Brent on X at Brent Moores CS. You can find me on X at Cameron May CS. And if you reply to one of my posts on X, I try to reply right back to you. I can give more sort of current updates on maybe market developments, or ask questions about trading and have a discussion about those even when I have the camera on. So yeah, give me a follow on X, and give Brent a follow on X, but you can also follow me on LinkedIn. So on LinkedIn, let me show you that. Here's my LinkedIn profile. You can find me by going to linkedin.com/n/Cameron May CS. Don't need to put in the rest of this stuff, just that part. And then give me a follow there. I just started on LinkedIn just a few weeks ago, but if you reply to my post there, I'll try to reply to you as well. And not everybody has an X account. And LinkedIn also allows for more in-depth discussions. There's not the character limit, so that's fabulous. But guys, that's it. I will look for you on social media. I'll also look for you in future webcasts. I want to thank everybody that's already clicked the thumbs up. I can see out of 146 people watching, we have 64 that have clicked the thumbs up. That's always appreciated. It's a pat on the back to your presenters. Sounds like applause to us, but it also gives us a boost in the YouTube algorithm, helps our videos be found by more people. They can learn things like scanning for vertical spreads. All right, everybody have a great day. I will look for you in a future webcast. I'll look for you on social media. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.